Hello everyone, Melinda Jennison's my name, Managing Director of Streamline Property Buyers, and I have another monthly market wrap here for the Brisbane Property Market, and we're going to run through the data and also discuss some of the interpretation as well. So before we get started, just a market snapshot. So you can see their listing volumes are down again throughout the month of September, 0.7% lower. We're going to run through some of the more specific numbers shortly, but auction clearance rates overall 58.1%. Buyer activity is still relatively high for quality properties. So we're still seeing more buyers than sellers, and that's what continues to push those prices up across our market. House values across the month of September increased 0.8%. Unit values were up 1.2%, so still outperforming that house market. And gross yields for all dwellings currently sitting at 3.7%. Listing volumes are the biggest concern that we have here in Brisbane. They're still lower overall. We can see that long-term trend. And for Brisbane, we sit somewhere between 28 and 32,000 listings when we look historically over the last 5 to 10 years. However, since COVID, certainly since 2022, we've seen those listing volumes sit somewhere around 16,000 to 19,000 per month. And that's a significant shift down based on our long-term trend. Month on month, we saw listings 0.7% lower in September compared to August, and total listings were down 7%. So new listings down 0.7, total listings down 7% month on month. So overall, fewer properties available for buyers to choose from. Now, when we look at total listings year on year, they're down 11.9% in September 2024 compared to September 2023. And this is what's contributing to that ongoing consistent supply shortage. At the same time, we've got sales volumes that remain elevated. Now, of course, this is an indication of the demand side of things. So year on year, sales volumes are up 9.9% here in Brisbane. So this tells the story where we've got increased buyer activity at a time where total volumes of properties available for sale are actually compressed or lower. Auction activity does remain a good barometer of what's happening in a market. The data for September actually shows that the auction clearance rate was 58.1%. You can see there how that compares to previous months. But the average number of registered bidders per auction in September actually increased. That's sitting at 3.7 bidders registered per auction. And of those bidders that registered, 66.7% were actively participating at the auction. So even though auction clearance rates are a little lower than what they were only a couple of months ago, given the fact that the average number of registered bidders is actually increasing, it potentially shows that the sellers' expectations are moving ahead of the market. So they're moving at a faster rate than what the buyers' expectations are, because we have more buyers than sellers registering, but it's a reluctance of those sellers to let those properties go at auction. Days on market currently sitting at 20 days. 12 months ago, that was 19. So it does show that we are still a fast-moving market. Properties are selling very quickly. And in fact, when we look at our on-the-ground observations, we're still seeing some properties sell after that very first inspection or open home, simply due to that high buyer volume. Looking at the dwelling values across the month. So in Brisbane, dwelling values increased 0.9%. Quarterly dwelling values are up 2.7% and annually 14.5%. So Brisbane does remain the second most expensive capital city market around Australia when looking at dwelling values. And remember, this combines both unit and house data. So we're going to be a little bit more specific in later slides, showing what's happening in both segments of that market. Again, looking at that price growth segmentation, this does relate to all dwellings. Once again, in the 3 months to September, you can see the lowest 25% of property values, that's the most affordable properties here in Brisbane, have actually increased the most in value, with a 4.5% change over the last quarter. Compare that to the most expensive segment of the market, that's the 75th percentile, or the top 25% of property values. They've only shifted 2.1% across the same time frame. It's so important to note that over the last 3 months, when this data has been collected, that the unit market has significantly outperformed the house market, and the unit market largely will fall in that lowest 25 percentile. So it's important to be able to distinguish and segment this data to understand what's happening in each segment as well. You can see the trends there in other capital city markets are similar to Brisbane, with Adelaide and Perth also showing that the most affordable end of the market is shifting the most significantly when looking at a quarterly basis. Now we're back to looking at the annual change in all dwelling values over the last 12 months. So you can see here, as at the 30th of September, CoreLogic shows that Perth has had the most significant change in annual growth for all dwellings at 24.1%. This is followed by Adelaide and then also Brisbane. So these three markets continue to outperform the national average and also every other capital city market around Australia when looking at overall dwelling value changes. Looking at the quarterly results for dwelling values, and again, it's the same three capital city markets that continue to outperform, with Perth results sitting at 4.7%, Adelaide at 4%, and Brisbane at 2.7%. Again, this is all dwellings, and we're going to break that down into different dwelling segments shortly. But you can see there a lot of other capital city markets on a quarterly basis have actually been in decline now. So there's definitely different things happening in different parts of the market, and it's important for buyers who may not be based in some of these locations to understand what's happening locally. Let's have a look at house values now. So according to CoreLogic, throughout the month of September, house values increased 0.8% here in Brisbane. That puts our quarterly growth at 2.4% in the housing market, and annual growth sitting at 13.5%. So what's happened in the last month is that Brisbane has actually overtaken Canberra in terms of median house values, and now Brisbane's house median value is the second most expensive compared to every other capital city market around Australia, behind Sydney. So Brisbane now sits in front of both Melbourne and Canberra in terms of that median house price. I will say though, in terms of what a specific budget will buy in Brisbane compared to the likes of Melbourne, for example, you may still get more value for your money in such way as a larger block of land or a larger house within the same distance from the CBD. So it's important to understand what the dollar value will buy and not just base purely decisions on that median value trend. Looking at unit values now, Brisbane had an increase of 1.2% in the median value for units across the month of September, and that puts the annual growth rate at 19.4%. So significantly more traction in the unit market compared to the house market over the last 12 months. Median values for units in Brisbane sitting at $661,925. So again, Brisbane's unit market at a median value level is now the second most expensive capital city unit market around all of Australia, again, sitting in second place behind Sydney. You'll see their gross yields for units sitting at 4.6%, which is obviously a lot more attractive and higher than in the housing market here in Brisbane. We're just looking at the property value changes in both segments of the market with this graph. So the house market are the dark bars, the unit market are the light blue bars. Now you can see right back in since March 2023, we've had significant growth in both segments of the market with positive dwelling growth month on month reported. However, since March this year, the unit market has absolutely outperformed the house market every single month. So the last 7 months, we've seen this significant shift towards units and townhouses, which are all captured within that data set. And you can see that downward trend since about mid-year, about May, in the house market in terms of that month-on-month price growth. So whilst price growth is absolutely still positive month on month, the rate of that price growth is starting to slow down as this as this graph demonstrates. Now looking at the 12-month value changes for all capital city markets and breaking that down into the house segment and the unit segments of the market. So again, we looked at dwelling values previously, and Brisbane, Adelaide and Perth were outperforming. When we're looking at the breakdown of house markets and unit markets, you can see there how Brisbane is a little bit different in that the unit market has significantly outperformed the house market over a 12-month period. So you can see Perth, similar performance in both segments of the market. Adelaide had a little bit more price growth disparity between the two segments of the market, but Brisbane showed a more significant shift towards units and townhouses where that growth was much more significant. Looking at 3-month changes over the last quarter up to the end of September, and you can see yet again that the Brisbane unit market has really been outperforming the house market. As the house market growth has been decelerating or slowing down month on month, the unit market has maintained a relatively high level of monthly price growth. But you can also see there in Perth that the price growth in the unit market is starting to outperform the house market, especially when we overlay this with the 12 monthly figures that we showed in the previous graph. You can see there with all other segments of the market, but for Sydney, every other capital city market is in negative growth territory in both the house market and the unit market across Australia. Sydney, very modest growth, more positive in the unit segment rather than the house segment over the last 3 months. Now in Brisbane, looking at the rental market, vacancy rates remain very, very tight, still sitting at 1.1% across the city for the month of September. So not much change there. There's certain regions that show slightly higher levels of residential vacancy compared to others, with the Beenleigh region and also northern Brisbane regions remaining the tightest with monthly vacancy rates sitting at 0.8%. Looking at rent price growth, it is easing when we're looking at those annual growth figures. So in the house market here in Brisbane, annual rent growth is sitting at 5.4%. And in the unit market in Brisbane, annual rent price growth is sitting at 5.1%. So tenants will be finding some level of relief knowing that the rate of price growth is easing. That said, when we're looking at where these numbers sat 12 months ago, we were in excess of 10% price growth in both segments of the market. So this is reassuring for tenants in that the cost of living, the cost of actually renting may be moderating for them. In terms of the market overall, Brisbane is still growing, but the rate of growth is easing, and this is happening in both segments of the market, so the unit segment and the house segment, although we will say that the house segment of the market, that rate of growth is slowing at a faster rate than is in the unit and townhouse segment of the market. We're definitely seeing the more affordable properties growing in value at a faster rate than the more expensive properties, and this is all dwellings data, so it's important to understand that the unit and townhouse market largely makes up the bottom 25% of property values, and this is the segment of the market that's definitely outperforming here in Greater Brisbane. We believe sellers' expectations might be moving faster than the market. That is a consequence of the auction clearance rates holding below 60% at the same time as the number of registered bidders has actually increased and the active bidder participation rate remains high. So we're still seeing plenty of activity at auctions, but sometimes the bidding activity doesn't meet a level that the sellers are willing to let the property go for. And a lot of those properties therefore go into negotiations. And here in Queensland, of course, there is no exclusive right to negotiate if you hold the highest bid. So a lot of those buyers that have conditions and are unable to participate in an auction because they may not be able to bid unconditionally are then able to put in offers. And we're often seeing properties go to multiple offer with conditional buyers once a property passes in at auction. We're still seeing quality properties sell quickly with multiple offers. That is when it is private treaty sale. Quite often after the first open home, there's usually more than 2 to 3 offers presented. We are still seeing some properties with in excess of 10 offers, although those opportunities are a little bit more rare than what we were seeing a few months ago, and certainly in that post-COVID boom. So based on the fundamentals, we still have low supply. The demand is still elevated. We do expect price escalation will continue, although we don't expect the rate of price escalation to continue as fast as it has over the last 7 to 8 months here in Brisbane. We believe that it will continue to ease, although the cost will continue to increase. If you would like to get in touch, please connect with us here at Streamline Property Buyers. We have a lot of free resources available to property buyers who are looking in Brisbane, to property investors that may be considering Brisbane. And if you would like to book a call with us, you can also do so through this QR code. We hope you have a fabulous month, and we look forward to bringing you another update soon. Thanks for your time, and bye for now.